Hello, everybody. It's Randy Selzer here. Welcome back to my YouTube channel and welcome back to the podcast. Today, we have a very special guest. Andrew Galea is joining us today. He's a prominent figure in the mortgage industry in Toronto, and he is I believe you're a senior vice president of sales or something like that with a company called Mortgage Pal. So, welcome aboard, Andrew. So nice to have you on board today.
Thanks, Randy, for having me. I'm actually a VP of Digital Sales for Mortgage Pal. Most of my team and I are licensed in three provinces: Alberta, BC, and Ontario. But I live here in Toronto. I love it here. I wish the weather was, constantly warm rather than being, erratic. I come from the Mediterranean, small island in the Mediterranean called Malta. So that's why I like the hot weather. So I'll settle for this weather for now, and hopefully it continues until end of November.
No worries, man. No worries. So you were actually born in Malta, were you? And you moved here with your parents when you were a little kid?
Yes, my parents brought me here when I was about 7 years old.
Okay.
So I assimilated to the environment. Difficult at first, but with some good, family. Family being my uncle, my aunt, my grandparents, they really, helped us out. My father struggled. He started off as a security guard, and then he's trained as an engineer. Eventually, he became a plant engineer for a glue company called LePage,
Oh,
and
wow.
he
Yeah.
helped us pay through university. My sister is an engineer as well. So yeah, we came from really nothing, and we worked. Like the Canadian
You know
dream.
what?
You work hard, go to school.
That's so great to hear. And it's a classic thing. It takes guts. I'm just going to say, I would think that it takes guts to move from a foreign country to Canada, to move anywhere, move your entire family. Maybe the language isn't there, maybe the English isn't perfect, and just work your way up from there. That's a great immigration story, and I'm a pro-immigration guy with limits, which we could talk about another time, maybe. But good for you, man, and you've done really well. I know you have. I know you're setting it on fire in the mortgage business these days. And we find ourselves in a very interesting market. Um, when we met last week, we talked a bit. And I've been in the industry 30 years now, in real estate for 30 years. And I've seen a lot of changes. We've gone through the boom years, we've gone through some slower years. But right now, it's an interesting time. As everybody watching this video will know, we've had this huge run up in prices in the GTA, also in Vancouver, and maybe not in Alberta so much till recently, but we can talk about that too because a lot of people are moving to Alberta. Um, but we're at a point now where prices are super high, and then of course we had the big run up in interest rates starting. I believe it was in March of 2022. We had 10 interest rate increases until just this past June, like a month ago, June the 5th, I think it was. They finally lowered rates by a quarter point, by 25 basis points, and I think my impression right now is that the market's still a little bit confused. There's so many people out there that want to buy property, and they're not sure what to do. They're not sure, should we wait? Maybe rates will come down some more. Should we buy now? Prices have come down. In certain areas, and it's an interesting thing. People think, well, the real estate market is one homogenous thing, but in my opinion, it isn't. It's such a local business where uh, first of all, the market here can be completely different than the market in, say, Vancouver, or the market in Calgary. And even within the GTA, the market in Mississauga, where I'm located, can be completely different than the market in Scarborough. It's completely different. It's such a local thing. And even within neighborhoods, you can find some neighborhoods which are fairly strong and other ones that are getting killed in terms of sales. They're just not there. So the big sticking point, the critical piece here seems to be mortgages. Everybody wants to buy a house. Everybody wants to buy, or a lot of people want to buy a condo. But with the raise in rates, the huge increases in rates, it's become pretty expensive. So again, my experience is even with first-time buyers, if they're looking at a condo, for example, for 600, let's say, you have to be making pretty good money. If you're a young couple, my experience has been you got to be making like close to 150 in order to qualify for a condo as a combined family income. So I tend to ramble on a lot, Andrew, as you found out the other day. But I'm going to turn it over to you and look for your insights in exactly where we're at right now. A lot of people have called me and asked me a specific question that I'm hoping you can, I know you can help me answer, is should we even consider buying now or should we wait a while? Because maybe prices will come down, maybe the rates will come down. We don't know that. And what would you, and I know nobody's got a crystal ball, and nobody in the entire industry knows for sure. But I think a person like yourself who does so much mortgage business, what would your answer be to that if somebody came up to you and said, Andrew, we're thinking of buying. What should we do? Should we buy now or should we wait?
This is a really great question, and I would start off by one of the famous investment gurus, which is Warren Buffett. You should be greedy when people are fearful, or be fearful when people are greedy. So people are really scared. Yes, interest rates have gone up. They've gone from were as low as 1.69%, and now they're around the 509, 5.5 mark, which is still pretty good. So the example I like to discuss is if you were to buy a $1 million property in Milton, 20% down, say with having a mortgage for 800,000 amortized over 30 years, whatever that payment is, versus buying the same property with a 20% correction. So your price point would drop from a million to 800,000. Your mortgage would be 80% of 800, which is if you're using the same 20% down payment, mortgage of 640. How much do you think, and a rate of say around 509, how much do you think the payment difference would be?
I
And
need
is
your
it
help with this one.
worthwhile? Yeah. Would it
Yeah,
be worthwhile buying a less expensive property at a much higher rate?
right.
Statistically, it's about 40% more of an interest rate. And you would say the difference in payment on a 30-year amortization is about $100. And the difference of the amount outstanding, which we can, I'll send you something after the fact on email, which you can share with your audience, is you're actually better off buying today at a lower price, higher interest rate, with a slightly higher payment, be it $100, because the amount owing after 5 years is significantly lower than if you
Right.
bought at the peak. Today is the day. If you need a house, yes, you can always wait. And if you buy a house today, you can aim for a long closing date of say 4 months. So you can wait till rates drop. Your payment will be slightly better. How much better? Maybe, the difference in rate being maybe a 0.25%. It's not going to be too much of a change in the short term. So what are the projections? The Bank of Canada has predicted to drop the overnight rate by 0.5% more this year. Whether there will be a change in July, which is at the end of the month, July 24th, I think it is,
Yeah.
in September or December, we're expecting 2 more 0.25% drops this year. Whether it's September, December, July, September, any type of permutation combinations, it will drop. But what will happen to the fixed rates? The fixed rates have already dropped. So you won't see the biggest drop in the fixed rates because they've dropped a lot. They've dropped by 1.5%. What will happen next year? Prime will drop probably by another percent. So cumulative, a 1.5% drop. The fixed rates predicted to drop maybe 0.5% by the end of next year. So not too much of a change. If you want to buy a place, you got married, you're raising a family, you're single, want ready to mingle in Liberty Village, you're young and bluer, you need a place because paying a mortgage and paying down your mortgage most of the times is better off in the long run. Yes,
Absolutely.
the rent payment may be slightly cheaper, but you're not having any equity in that, right? And over time, prices will go up.
I do agree.
Will they go up at the same pace? That's something that is yet to see. But could you expect it to go up 1 or 2% inflationary measures? Yes, I believe that's the case. Because as you have a property, you pay down the principal, you build equity. Inflation, even if it goes up 1 or 2%, you're still getting that value back at some point.
Andrew, that brings up an interesting question that I had somebody ask me actually just yesterday. If it's true that the rates are going to continue to go down, let's say another couple of instances this year and again next year, maybe does it make sense to start looking at variable rate mortgages again? I mean, that's a good play if you believe rates are going to come down. And, if they go down 3 or 4 times, whether it's 25 basis points per time or whatever, maybe that is an interesting way to look at it. Would you recommend somebody who's saying maybe we should look at a variable rate mortgage again?
So with any type of recommendation of variable versus fixed, it depends on someone's tolerance. So to answer your question, if you can, whether payment changes, if you have some time, you have a buffer, or in the long run, a variable rate has been a better choice. However, during this pandemic time, these were rates that we've never seen, rates under 2%. If you had said to me, will you see a rate of 4.99 or 3.99? I said, you're bonkers. But when we saw rates under 3, under 2 at some point,
Yes.
wow, what a difference. Those were the times to lock in. But the Bank of Canada, they kind of misled the public. They said we're going to keep rates for very low for a long period of time.
Yes.
And based on information, to their defense, they saw that it would take some time for the economy to recover. And that's what they strongly believed. So what did people do? They went out and bought based on very artificial rates. So to answer your question, you can get, if you buy a property under $1 million with the minimum down, you could probably get a rate around prime -1, right? So prime being 6.95, 1% is 5.95. If it drops by 1%, that's 4.95. If it drops by 1.5%, it's 4.45 or whatever the case is, right? However, that's assuming the predictions are correct. What happens if inflation reemerges, right? And then there's short-term value of money, meaning why should I take a prime rate, prime -1, prime -70, prime being 6.95? What happens if the pace of the change doesn't happen as fast as the economists predict? You could have locked in at a rate of maybe short term, 3 years at 5.09. You realize the benefit of the lowest rate today payment. And most of the lenders out there, if you take a 3-year term, 6 months prior to renewal, you can go back to them. And if rates are lower, without any penalty, get out of your contract and get into a new contract. So in theory, that 3-year term becomes 2.5 years. So in my professional opinion, right now, if you believe the pace of change in the prime rate won't be as fast as people predict because of the reemergence of inflation, taking a 3-year term, there's merits to taking a 3-year term or short term. So most of my clients are either taking a variable rate, and given what's happened in the economy, we expect the prime rate to drop pretty quickly over the next 18 months.
Right.
But if you don't want to worry about this, monitor, and people are too busy. If you want to forget it, locking in a rate of around 5.09 for 3 years is great. You can even get a 5-year rate of 4.99. So some people just want peace of mind, and then they reevaluate things later on.
I agree with 100% of what you just said. And the other thing that we have to keep in mind is that the Bank of Canada, it's not just a straight line that they're working on. They have all sorts of other considerations that they have to think about all the time. One of the big ones, I believe, is the difference between the US dollar and the Canadian dollar. That's something that they have to consider because, as I think we talked about earlier, that if Canada drops their rates a lot and the US does not, then you get that divergence between the US and the Canadian rates. That could cause a lot of pressure downward on the Canadian dollar because investors would get a higher rate of return on US dollars than they would in Canadian. And what that means is we import so much stuff from the US, especially food. If you're buying tomatoes coming up from California, if the Canadian dollar drops 10 cents or something, that just basically imports inflation. So that's something that the Bank of Canada has to keep an eye on too, that there's not too much of a divergence between the US rates and the Canadian rates. So it's pretty complicated. It's way beyond my skills, that's for sure.
It is very complicated, Randy, and you hit it on the nail. If the US does not move rates as fast as the Canadian government does, right, then you're importing inflation. Now, will the Canadian dollar drop to 50 cents, 66 cents?
I hope not.
I hope not too, but it's holding steady right now, right? Because remember, US hasn't lowered rates yet. Inflation is still a big problem. My wife is American. I can tell you, every time I go to the States, a
Okay.
bag of milk is like $6 US. Using exchange rate, be it 40%,
Yeah.
6 times 1.4, that's what? $8.40. It's
Yeah.
significantly higher than the Canadian equivalent.
Right.
So, yes, we can be importing inflation. But going back to the real estate market, there's an inverse relationship. What does inverse mean? Opposite relationship. As rates go up, prices come down. As rates come down, prices go up. So, is it a great time to buy? No time like the present, because if you're going to wait, we could have a busy fall. Rates drop, there's going to be more competition, right?
Right.
The best advice that I was ever given, right? And I've been doing this since I was 24 years old, 21 years. So I'm turning 45 in September. I may look younger or sound
You
younger,
do look
but
younger. You do
I'm
look
getting up
younger,
there.
man.
Thank you so much. And you look really young too, Randy.
Yeah, thank
So
you. You should go see
yeah,
your
and
eye
you're
doctor.
only as old as you feel, right? At the end
That's
of the
true.
day,
That is
right?
true.
The secret is alcohol, red wine, Italian wine. Even though I'm from Malta, I
Yeah.
still have some Italian blood in me.
Yeah.
My grandfather was Italian. But my point is, you got to live life and buy within your budget, right? You don't want to be house poor. So
Right.
if you can afford it, if you're tired of paying rent, explore some options. And
So
even
true.
if you decide to buy a place, nothing's stopping you from buying a place with some rental income. Buy a duplex, buy a triplex, a fourplex, or even a bungalow with a legal basement. Because guess what? That rent is a mortgage helper.
It
What
is.
does that mean? If your total payments are $3,000 and rent is $1,500, you're paying $1,500 net, which is amazing, much cheaper than you paying rent. As crazy as the Vancouver market is, people are still getting by because they're renting out their guest houses, their legal basement, double suites sometimes they have for
Right.
crazy money. So at the end of the day, the
And
effective money they're paying out or shelling out is maybe cheaper than rent they could pay themselves. Because living in Vancouver isn't cheap. Living in Toronto is not cheap. I
no,
heard of stats. Your average income, if you want to buy $1 million home or so, or $1.2 million average price in Toronto, has to be $215,000.
right. And
That's very hard.
not everybody makes $215,000 as a family income. It's a lot of money. Now, you touched upon other provinces. It's interesting, and I know you're licensed for Alberta as well. I recently did a podcast with somebody who's got a big real estate team in Calgary, and that has definitely been a hot item over the past 6 to 12 months. A lot of people from the GTA have moved to Alberta. A lot of people. And it's something to consider. I don't work in Alberta. My license is Ontario only, but I've known people, past clients of mine that have moved out there. It's definitely a different world. I believe you can still get like a detached house up in suburban Calgary for like 600,000, 650 for a nice house. And there's a whole lot of other savings. There's no land transfer tax in Alberta. I didn't know that until I interviewed this other guy. There's no land transfer tax. And there's no provincial sales tax. So there's a lot less taxes, a lot less just expense. Now it's a different place. We're blessed. I'm a complete believer in the GTA. I really am. We're so lucky to live here, and a lot of people don't realize how blessed we are. That I mean, if whatever you want, it's here. If you want to go for Korean barbecue for lunch, you can do it. You want any kind of food, any kind of multicultural experience, it's here for sure. It's a big dynamic city, and I love Toronto. I really do. And I like Mississauga too. It's really changed a lot in the last 20 years. But at the same time, you have to look at the dollars and cents, and things have to make sense because there's a lot of people just hanging on. They're just hanging on because things are so expensive, whether it's putting gas in the car. Not everybody can buy a Tesla, and or whatever, and or just buying groceries. If you have a family with some kids, groceries can be a major expense. And of course, the price of real estate. So it's something to consider. I'm certainly not counseling people to move to Alberta, whether it's Calgary or Edmonton. Uh, I was in Edmonton once in a previous lifetime. In the month of January, it was minus 41 there. I have never, ever, and I'm a pretty, I can handle it, right? I have never felt cold, that cold, minus 41. It was in January in Edmonton. not a good time to visit. And there were ice crystals in the air, and you had to breathe shallow because if you took a deep breath, it would hurt your lungs. That's how cold it was. It was outrageous. I thought, how do animals, like the wild animals, how do they even survive when minus 41? So there are some trade offs for sure. Nothing against the good people of Alberta. It's a wonderful place, beautiful province. But those are all things to consider. So people are looking around, I can tell you. And a lot of people, there's a constant conversation we get about so many new immigrants that have come to Canada, which is probably a topic for another time. But and I am pro-immigration, but I do believe they've gone overboard here. They've just let too many people in without managing the process. And nobody in Ottawa stopped to think, well, are there enough places for all these people to live? I don't think anybody even looked at that. So, and I know some of them have moved to Alberta, and I think, well, if you think Toronto's cold in the winter, good luck. When you're out in Calgary or especially Edmonton in the middle of winter and it's minus 40, you're gonna have a rude awakening about what the real Canadian winters are like. So I'm not counseling anybody, but here we have to be realistic. It's super expensive, like you said, to buy a $1.2 million house, which is an average house in the burbs. It's an average house. That's our average house price, right? You need substantial income, and not everybody is a doctor or a well-established lawyer or a dentist with tons of clients. Not everybody makes, or a very wealthy mortgage broker. Not everybody makes 200 grand a year. And for all the people, especially people who are new to Canada, the family income. One person might be making 40, and the other one might be working at Tim Hortons. It's just reality. You have to say, you got to start somewhere. You came from an immigrant family. You saw how people have to struggle. And now with today's prices, it's really tough. So tell me just a little bit. We don't want to get into this whole Alberta thing, but it is a thing. It is definitely a thing right now. And your company has offices in Alberta and in BC. I don't think too many people are moving to BC right now because they're even more expensive than we are. But what do you say to people? Say, we're thinking about moving to Calgary. What would you tell of someone like that?
I'll say that, like any choice in life, it needs to be the right choice for them.
Right.
If it's just for having a better style of better way of living, it is cold. I've been to Edmonton, in January, and as cold as it may be, minus 41, I didn't feel. I felt like it was like more like minus 23 in Toronto weather, right? Calgary is a bit warmer. You move to Calgary, and the infrastructure in both of the provinces, in the province, in the two different cities. Edmonton is more government, jobs, and the economic landscape of each of the cities is developing. There's less reliance, especially in Calgary, on oil and gas. So the answer to your question is yes, migration is happening, right? But if you have family here, like I have, and my parents here, my sister, doesn't matter, at the end of the day, I'm European. I need to be near my family, right? There's no way that my 70-year-old mother and 75-year-old father is going to hop on a plane every month to come and see, the wife and I and my 3 kids and my dog. No way, not going to happen, right? So sometimes you got to live where your family is. And it doesn't matter at what cost, you try to make it work. And that's why you're seeing people in the GTA. I mean, whether you want to buy in a GTA or maybe outskirts. I spoke to someone at the gym today. She just bought a property in Sudbury. Yes, it's 4 hours away from Toronto, but she bought a duplex for $530,000, not to live in, but to rent. Rental income is about $5,000 rent. So are there opportunities in Ontario? Yes, there are. Yeah. But, does it make sense? At the end of the day, buying a rental in the core, it boils down to dollars and cents. Don't buy for speculation in terms of investments. If you're buying, if you believe the prices over time will go up and you're okay and you're positive cash flow or your neutral cash flow, then that's a trade-off, like in anything else, right? But I can tell you, why are people moving to Alberta? They're moving to Alberta for several reasons. Investors are buying them up. I mean, I bought a place myself. $380,000 for a house with 2 units 3 years ago. It started off with rents about $2,700 a month. Now it's $3,500 a month. The same property can be bought for $590,000. Yes, nice. You could live a life. And with all these jobs having the ability to work from home, you don't need to live in a city. You can live in the burbs. You can move to Aurelia, further north or east or west or south.
It's true.
And you can live in the lovely province of Ontario, live near family. And if you can't afford $1 million home, there are programs out there where you can buy a home, the first 500,000, 5% down, and I think thereafter 10% down,
Yeah.
with that mortgage helper we discussed. And what does it make in terms of difference? It could mean, depending on the rental income that you're receiving, $100,000 to $200,000 increase in budget. I had a client yesterday. She wants to buy in Wasaga Beach. I said, she has $150,000 down. She was looking at a mobile home. I said, yes, you can afford to buy this property and no rental income. Imagine if you could increase that budget from $300,000 to $600,000 with the mortgage helper. She said, wow, no one really thought about that. No one actually gave me the option. It makes sense. Lenders that we work with will use 100% of the rental income, remove taxes and heat. Makes a big difference. If you're living in the property under $1 million, it makes a huge difference. And the lenders we work with today, besides the banks, we work with credit unions. They qualify on the rate that you actually getting if it's a conventional deal. And what is a conventional deal? When you have 20% down. That's what it means.
Right.
If you buy a home, whether it's an investment property or a place to live, that means you qualify for more. How much more? Maybe 20% more. So
That's
Ontario is a great place to live.
I agree. I'm not moving. I'm happy here.
I'm not moving. I'm here. My parents are here. And even when, unfortunately, when they're not here, I still have my sister. And you have your friends and, acquaintances. Toronto is the capital of Canada.
They don't want to hear that.
It isn't the capital of Canada.
They don't want to hear that anywhere else. But it's true. It's certainly the engine that runs the country. There's no question about that. Yeah. No, I'm a
New York,
Toronto.
in my opinion.
Yeah, it is. It is definitely. And I love the city. I've lived here since the 70s now, and I've seen it change so much. Although there's too much construction right now, they need to cool it a little bit. It's gotten to the point, Mississauga too, where you can't even drive down the street anymore because every street is under construction. Everything, but that's another story. So yes, we're at kind of a very interesting time, I think, in the real estate market. I certainly can't remember another time where there's so much uncertainty in the market. And yet, like what you said, what Warren Buffett said, the time to buy is not when there are multiple offers on every condo that comes on the market. There's 24 offers. That's ridiculous. That's the worst time to buy. And the best time to buy is when there's a little bit of fear out there and people are not sure. Nobody wants to lose money, that's for sure. And people are by nature, I think, cautious. You get away from that herd mentality and they start crunching the numbers saying, well, maybe we should wait. But that your point is well taken, that is absolutely the time. Somebody else said the time to buy is when there's blood in the streets. I don't know if we want to wait till there's blood in the streets, but the time to buy is when the market is a little bit tentative, for sure. And we've seen a drop off.
Keep in mind, Randy,
yeah.
Also that it's not the rate decrease itself. It's a psychological effect.
Yes.
What is expected to happen? And, if you understand and you've looked at the markets over time, prices will recover. Yes, it will go up and down.
Absolutely, they will.
But if you need a place to live and you can afford it, and you have a long-term horizon, no time like the present is a great time to buy.
So that's words of wisdom, I think. But you have to take a look at the longer term and you have to have a plan. I think that's an excellent idea. I also say to anybody who's interested in purchasing property, the very first thing they should do is go and talk to their bank or go and talk to a mortgage broker, because there's no point in looking at properties, whether it's online or in person, if you don't know if you can afford it or you'll qualify. And that's a very important thing. The stress test is still in place. That's sort of a dirty word in the banking industry, but that's you can explain it better than me. That's a 2% increase that you have to qualify for on the actual mortgage rate that you're getting. And I'm actually surprised that they didn't take that out. That would have been one thing that would help the market take off again. But I always say to people, go and
So
talk to your banker first, talk to your mortgage broker first. Mortgage brokers are great because they're not tied to one specific bank. They have all the banks competing for their business. And that's the first thing that any buyer should do anywhere, is to see, well, how much can we actually afford to buy? How much are we qualified for? Would you agree?
yes,
That's a
Randy.
plug for
So
you, man. That's a plug for you and Mortgage Pal right there.
that
Okay.
is, I could tell you. So thanks so much for that
No
important
worries.
note. So a pre-approval, so that we know what it is.
Right.
There's different forms. On the essence is you're pre-approved for amount. Now, whether the bank, you deal with the bank, or if you deal with a mortgage agent, such as myself, it's really a rate hold. You will not get the best rate on a pre-approval for sure. So if you're shopping 50 lenders, a pre-approval, all it is a rate hold. And the banks will not, excuse my French, drop their pants on something that may or may not happen
Right.
on a pre-approval. So if you're going through like TD, Scotia, CIBC, I want that 499 or 489, guess what? Most of those specials are not given on a pre-approval. They're given on a live deal. So it's a rate hold at the end. However, we take one step further. We validate income. We validate down payment. We use alternative credit if you're new to Canada. We look at rent payments. We coach you so that your credit is good. Did you know that there's actually two type of credit agencies in Canada, Equifax and TransUnion, and each lender uses their preferred way. So for example, Scotia will use TransUnion. TD will use Equifax. There could be a situation where a client can have a poor score on Equifax. The minimum score for a high ratio mortgage is 600. So you could be below 600 in Equifax, but your TransUnion could be above 600. It could make the difference of you getting this place and or not getting it. Simple. And working with the right professional. So when we do a pre-approval, we do a forensic assessment of the client. Right. And not only that, we work with our partners like Randy, where if a client's buying a condo, we'll call the insurers, we'll call CMHC, we'll call Sagan, we'll call CG to make sure there's no known issues with the strata. And if there are known issues with the condo, then we work with specific lenders. Did you know that I had a client buy a place on Dixon Road? There's a series of condos that are considered red flagged.
I know
for
them
what
well.
Variety of reasons, right? Yes. However, we had a client who was a teacher. They had 5% down, very solid with with some good assets and to weather any storm, right? With stable job. She went to her bank. She went to CIBC. She went to TD. No. She came to me. Based on my relationships with the non-bank lenders, I was able to work with the lender, work with the insurer, and get her approval. So most of the real estate agents out there will say, no, you need 20% down to buy this property. Yeah. You know what? This lady would be homeless. She was renting a place. She's being kicked out because the landlord was selling the place. And she had no choice. So she could only afford $400,000, a 2-bedroom apartment in one of those buildings, and we were able to do it. We worked well with our partners, and we got it done.
Yeah, those buildings are tough to get financing for. I know them. Years and years ago, back in the 70s, they were high, believe it or not, they were high-end buildings built for like Air Canada pilots. It was a lot of airline people that bought condos in there. But it's had some demographic changes in there, and there's been some. I had an investor once who was looking, and we went through several of those. And man, that's another world up there on Dixon Road for sure. So, and I know we found out they were actually they were blacklisted by some of the banks. It's like, no, we won't lend on that particular property.
Or they may be. But let's touch on the topic of like the stress test. So to answer your question, if you go to any lender, buy a new property, federally regulated institution, whether it's conventional, 20% down, or a high ratio, whatever rate you have, plus 2% is what the rate you qualify for, right? So as much as people hated the stress test, it allowed and assumed rates were going to be higher. So the banks and the market is solid because of the stress test that we had, to the defense of the governments that placed this. It made sense,
Yeah.
right? They didn't want you to get something, and they knew rates were going to go up at some point. So they based it on you having to pay much more than what the actual payment you're paying, right? However, remember how I said the credit unions in Ontario, in Alberta, BC, they have the ability. They're provincially regulated, not federally regulated. So what that means is
Right.
they make the rules. And the rules are whatever they say are the rules are. If you want to, for example, we work with a credit union in Ontario called Contact Credit Union. You buy
Okay.
a place, the rate's $4.99, you qualify, stress test on $4.99. That means a big difference and also besides all this, working with a mortgage professional allows you more options. We have 50 lenders, and each lender has different type of rules. Even rental offset for subject that they're buying, whether there's rental income, non-subject, couple rentals that they have, the amount of rentals they have, the use of child tax benefit, the age of the kids that a client can have to use a child tax benefit. It's so complicated. For the average consumer, you need a professional, and you're doing yourself a disservice by using a bank directly because you may be limited in terms of your budget because you don't know what you don't know. You need a professional to guide you, at least give you a second opinion. And if you really wanted to buy that bigger home and it's within your budget, it could be within the realm of possibilities.
Okay, well, that's excellent. So listen, Andrew, it was a pleasure having you on the podcast today. A real pleasure. Nice to have you on board. Hopefully, we'll get you back again another time. And thank you so much for your insight at this critical time, I think, in the real estate market right now in the GTA. I think there's a lot of opportunities out there right now for those people who realize that whole concept that you brought up, that the time to buy is when the rest of the world is nervous. And we could be at a point now where it makes a whole lot of sense to get reinvested into the market. So thank you so much. I'm going to put all your contact information underneath the YouTube video and also in the podcast so people will be able to reach out to you. And thanks again for being on board today and have a wonderful day.